The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, everyone. This is Larry Pesavento for TFNN. If you have any questions, it's 877-927-6648. And I'm going to have a special guest on Wednesday. Arch Crawford is going to join us, and he's going to discuss the similarities to where we were in 1987. I will post a chart in the den in just a little bit, and for Tiger TV, so that you can get an idea of what Arch is going to be talking about. First of all, I just wanted to get a few things, get on my soapbox a little bit for being in this business so much. It really amazes me, that the man who lost the $2 billion plus for J.P. Morgan was fired from Cantor Fitzgerald in 2007 for losing $2 billion for them. And so it's amazing. These people don't realize, that are watching TV and stuff, that they really, it's not their money. They don't have any skin in the game, so it's no problem. He'll probably get another job with Goldman Sachs or somebody else, or who the other side of the trade that the people took of the J.P. Morgan trade. So when you see this, you have to remember that these people are paid a salary. They get bonuses sometimes whether they make money or not. And, the fact that the gentleman was hired by a prestigious firm like J.P. Morgan after losing money, at Cantor Fitzgerald, just really, totally amazes me. What else amazes me is that there was an auction for one of Babe Ruth's jerseys that sold for $4.4 million for one of the jerseys that Babe Ruth had worn during his career. His hat just sold for $400,000 last week, so it just, boggles my mind. And then Lawrence Taylor's 1991 championship ring from the Super Bowl, which he had to auction off because he's under distress, much like Dennis Rodman is, sold for $230,000. Well, that ring probably has $40,000 worth of diamonds in it, so that's not too much of a premium. So, it's just amazing what's going on. What people are willing to pay for things that I think are just. But that's my opinion, and anyway, we'll see what happens. But what I wanted to talk about to start the show is that we are over, a pretty big solar eclipse. It's the largest cycle of the solar eclipse cycles going back 18 years. There's an 18-year solar eclipse cycle that was pointed out in the Mayan calendar. Several different, and other places too. But the last time this occurred was in 1994. And if you'll go to the newsletter this week, I put the relationships and showed you, the long-term cycle between 1994 and where we are now. And so this is a very, very important time period, that we're looking at. Now, this solar eclipse is the strongest that we have in 18 years. And the reason for that is the apogee, in other words, the distance between the moon and the Earth is also at the farthest point that it has. When you match it up with the eclipse of the new moon, that causes, super amount of power. It's referred to sometimes as a supermoon, but, whether it's super or not, I don't know. There was one major earthquake in Italy. There could be another between now and the lunar eclipse of June 4th, but Arch mentioned that many times that this is, at this particular time where the eclipse is formed, that this would form more of Asian geomagnetic effects, if that's what's going to occur. But if you'll take a look at the Tiger TV, I've circled the area from 1987 when we had the low in September. We had a solar eclipse, and then we rallied into the lunar eclipse of October 6th. And when that hit, that's what started the whole move down. Now, we have been talking about the weakness in the market for quite a while here. And one of the things that we mentioned was to look for, and we spent a lot of time with this, and that is the fact that when in 2007, when Blackstone came out with their initial price offering, it was received very, very poorly. And I mentioned, if you're interested in buying Facebook, wait a little bit, just to see what happens, because when that came out in 2007, the market dropped from in Blackstone dropped from 38 all the way down to under $4 a share. Now, whether anything like this is going to happen to Facebook or not, I don't know. All I know is that it started very, very poorly, and so you want to keep in mind that markets repeat themselves, over and over again. On our last show on Thursday, before the Facebook was introduced, I was mentioning that, it will show some Fibonacci, relationships when it comes out. Now, the opening of Facebook, they show as $45 a share. Frankly, I was in front of the machine at 11:30, watching Bloomberg to see, what the price was, and I never saw a trade above 44, but they show 45 as the high, and that means it misses the 61% retracement of the day by about 4 cents. So it came very, very close, and then today's expansion was nothing more than a 1.618. So the 33 level is going to be very interesting because if it drops much below 32, this stock is on its way to probably $14 a share. And I don't know if that's going to be the low of it, but we'll have to wait and see if this is going to be. There's my wait and see again. I've got to change my moniker on that. I don't particularly like that. But anyway, this is why you have to be careful because markets repeat. So we have another factor that we're looking at, and that is Facebook was received poorly, much like Blackstone was. Commodities prices are still going lower. The dollar is at a potential double top up here in the 82 level. It's very overbought, and the same thing with the euro is very oversold. So that's what is happening with the dollar and the rest of the thing. Now the question is, what's going to happen with this stock market rally? And we had the new moon yesterday, and if you remember in Tom Pelk's report from Nomura, the new moons are buys usually, and then you sell into the full moon. That will be coming into the lunar eclipse of June the 4th. Now, whether we're going to, be in a one-week rally or not, we don't really know because the market could go sideways and then just jump up, on June the 4th. But all the things are set up that we're looking at some real volatility coming, folks. And all you have to do is to look at the foreign markets, and I'm talking every foreign market. I mean, there's none of them that are strong. And so if you'll just pay attention to that, I think it will keep you from getting, too lulled. I really enjoyed listening to Basil because he said he has to wait to get more confirmation to see if, the market is going to really turn from here. One day doesn't do it for him, and I couldn't agree with him more. We came down, very quickly in a very orderly fashion, not very volatile at all, which is another, a good sign, from the bearish point of view. That means there's still bulls out there that, still want to buy. And, well, that's what, the waiting for that is what's really important. So you wait a few days and see what happens with this, buying and selling. But we did have the new moon and the solar eclipse, and it was the strongest solar eclipse since 1994. So this is probably why we're getting this bounce off of here. We just missed the 61% retracement in Dow Jones in the Dow Jones average. We hit it in the New York Stock Exchange Index. We made that big AB equals CBD pattern, and we did a few others. But it will probably it's completed that pattern. Now the question is the rally back, and we've had a good rally so far. We rallied over. In fact, we rallied exactly 20 points. In the S&P since the early morning lows of Sunday night. So. The question is, 20 points in a matter of a few hours is pretty good, but it still has to, get above, 1313 in order to, consider its move upward. Now, if it does go higher, it would be my opinion that we'll probably get somewhere in that 1335 level of the S&P if it gets really strong, because that's where it broke down from. We mentioned that many times, is that the 1335 level, once it broke that it was heading down, and we did get that move. The Bradley model is turning down and has turned down. It's still down. That's another bearish sign, that we're looking for. The bonds They probably haven't topped yet, but they're probably getting close. When we come to the second part of the break, I'm going to go into the bonds in depth and try to give you an idea of what my opinion is. And believe me, my opinion here can really get us in trouble. It's not going to get us in trouble very much because we're going to use some risk management, but I am really bearish on this bond chart. This bond chart is an ideal pattern recognition cycle phenomenon that you don't see but once every generation, in my opinion. And then believe me, there goes my opinion. So it's just like anything else. Its opinions are, everyone has one, and they usually smell. They're just like armpits, so you have to be careful. And that's especially true of me because I have, I really look at this stuff and I watch all the charts, and I get the tendency to get biased when I'm at these points. Sometimes, they work. Most of the time they work. The higher probability that they do work because the patterns have a positive expectation, but sometimes they don't work. And this is where we need to, to really focus is on how much we're going to make, but on how much we could possibly lose. And that's why we're in the TBT at 1680. I think the low was around 1620. Basil, he was looking to buy it around 1610 to 1590. That would be a new high. That would be really close to 149. In the long-term bond. That's a point from where it is right now. The $64 question is if the market does break down and collapse from here, is the Treasury bond market going to have another flight to quality? And the flight to quality here, remains to be seen because, I believe that, we're printing money, faster than, any printing press in history. So if that continues, then, I'm going to be wrong, and they're going to keep interest rates, very, very low for a long period of time. History says that can't be done, but, history can sometimes be rewritten, and that's what we need to be focusing on. The New York Stock Exchange Index has, as I mentioned before, has completed the AB equals CD pattern. It stopped exactly at the 61% retracement today. It was has bounced a little bit from there. It had been down like 15 days in a row, I believe, so a rally was overdue, and we have been in a spot where we've had a new moon occur along with that strong solar eclipse. So we'll see if this is going to be the case. The real test here is this the period that we're in right now. Just like the period from May 2nd, through May 5th was very important. The period that we have now between the May 20th and June 4th. Now remember, that's a good 14 days. That's 2 weeks. So there's a lot of things that can happen in that 2 weeks, but it's going to get very, very active. The volatility that we've had has been very, very minor. And so my assumption is that, this volatility is going to pick up, and we're going to see some, bigger moves. Now, the real bearish part of this, and Basil related to that a little bit on his show, is that if we only get a 3 or 4 day rally into let's say 3-day rally, Monday, Tuesday, Wednesday, into the 23rd, and then make new lows, oh boy, then you're really going to go down hard. We've got to take a break here. 877-927-6648. If you have any questions, when we come back, we're going to be talking about the Treasury bonds.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Back, folks. And I've posted into Tiger TV a picture of what's been happening to federal debt over the last 30 years or so. And as you can see, the exponential move that we've had over the last 4 years or so, it's just been, truly amazing. And the people that want our debt is just absolutely, mind-boggling to me, because the more paper we print, the more they want it. That does not mean that it's the right thing to do. It's just to mean it's a function of what the market does. If you remember in the movie, Wall Street, the very first one, Gecko bought this painting for like $30,000, and now it's worth $400,000. And he said to Bud Fox, the perception is real. I perceived that it was worth $400,000, and now it is. So this is, what we're looking at now. Is the perception real, or is it not? Now, if we take a look at the long term, and I've mentioned this several times, I've shown it every time in my letter. It shows that the long-term interest rates have been going down, and they have not broken any bottom of any quarter for the last 30 years. And now we have completed the big butterfly pattern that we've been waiting for. There's still a potential for possibly 149 or 150, but we have made the first objective at the 148.20 level. So this pattern is definitely complete. To me, and this is my opinion, as I want to warn everybody, but this is probably one of the better patterns that I have seen in a long, long time. This is got everything that you could ask for. The measured moves are there, the patterns are there, the scenario of how everything is fitting together with foreign debt and everything else, is also present. And this is why the trade looks so good. Now, TBT is still underwater a little bit. We have a really wide stop on that of $2 a share because it's double weighted short. And so the stop on the TBT has to be at 1480. Now, if it gets to 1480, we will be out of the trade, and that means that the bonds will be, far higher than the 150 level, and there could be an exponential move from this level. They could expand past the 1.618 level, and we don't want to stand in front of it. We'll get back into it again, but we basically have to protect ourselves against ourselves, because markets are seldom wrong, but men often are wrong. So this is the main thing that you must do, is to focus on how much you're risking, not how much you think you're going to make. If you'll take a look at that long-term interest rate charts, even though interest rates have been going down for 30 years, there have been tremendous moves of well over $30,000 or $40,000 per contract every 3 or 4 years. As a matter of fact, in 2009, which was my trade of the year when the bonds were in the 140 level, they dropped better than $30,000 that year. That was the year of 2008, and we are thinking that this one will even be better because of the butterfly pattern. This is the first. Actually, it's the second. Actually, there's 3 butterflies on this. Wow, I should have drawn those in. They're really amazing that there's 3 butterfly patterns in this since 1994. But we will we'll make our bet here on the one that we have now. It's completed. Whether it has the move above the 150 level is still letting the market tell us if that's going to be the case. And from that, we will, move on to the next thing we want to look at. Now, we want to watch what's happening with the German bond, because this is equivalent to our 30-year bond in Europe. It's the 10-year German bond, and as you can see, that there is a huge AB equals CD pattern that is also completing. There's also a butterfly pattern in this one. This one only goes back about 7 years, but if you did the 30-year on this one, it would be very similar to what happens in our 30-year bonds. In other words, the people have a very strong affinity, to debt, and this is should be coming to an end, very, 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 very closely. And very, very soon is what I mean. But this is a trade, and it's no different than any other trade. But we have to keep in mind that it's just a trade, just like any other. Now, we have completed the AB equals CD in the 10-year notes. This would be the equivalent to the 10-year German bond. And we have gone up to the 133 level, which was hit on Friday. That was the 1.27 expansion over the past year. The long-term chart on this looks exactly like the bonds, because these rates are around 1.5. The 30-year Treasury bond is around 2.7. We got to pay some bills here for Mr. O'Brien. Then we'll be back, 877-927-6648.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations options, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, your ultimate trading mastery system, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back. 877-927-6648. This is Larry Pesavento. We have a caller. John, are you there?
Good morning, Larry.
Good morning. How are you?
Very well, thank you. Larry, I wanted to ask you about the S&P, the solar eclipse cycle, and the feature of your newsletter here this morning. Of course, you referenced the 18-year Saros cycle as being relevant, perhaps. I'm looking at the chart you featured, in which you had the low in 1994 when the last Saros cycle solar eclipse occurred, and then you notated 1994 to 2007 or 2007 a 13-year bull run. My question is, with the Saros cycle solar eclipse occurring here in May, please elaborate. What is in your thinking about what is likely to come off of this cycle? Is it something very major that you're thinking here?
Yes, the reason why I think it's so major is the fact that we have the Bradley model, heading down, just like we did in 1987, just like we had in 2007 and through 2009. We have the same situation going on now between 2012 to 2014, where the Bradley model has a strong bias to the downside. The 18-year cycle, can have a bandwidth of well over a month or so because of the fact that these things do take time to trigger. But the fact that it's there, and we've seen it several times, and if you go back and 18 years later than that, and go back to 1976, that was also one of those places where it was time. It was a really good buying opportunity in 1976. That led to the market going above 1,000 for the first time. So
yes.
All these cycles are related, and the fact that we've been up into this 18-year cycle, makes me believe that we are heading down. But the primary thing that I'm looking at, John, is the Bradley model, and the other things that are happening in the market too. The Facebook thing. I mean, this was the biggest IPO that was ever, brought out, and 580 million shares, John. When I was trading stocks for the first time in 1965,
yeah.
we had a party at the Walston and Company office in Beverly Hills. That was Ross Perot's company. We had a party in the office that day because we did 5 million shares on the New York Stock Exchange that day.
Mm-hmm.
And now, now they do 5 million shares of Intel on the open.
It certainly makes you stand up and take notice. There's no doubt about that.
Yes. The big thing is that we have, so many people were interested in Facebook, and to me it was, the biggest, it's not a Ponzi scheme, but just people just paid too much for it. But the reason why, my wife, Sarah, is Chinese, and the reason why, and she brought this out that I didn't realize it, the reason why it was priced at 38 is those are the two lucky numbers of Chinese, which is the 3 and the 8, and then he married his Chinese girlfriend the day after. So I think that's why they priced it at 38. But I could be wrong on that, but it does make sense.
Unreal.
And,
Unreal.
Well, we'll see. But 580 million shares, and the fact that Morgan Stanley tried to support it that first day at $38. I mean, the guy that's the risk manager there, that guy should, he should really, look for another job, because that was not very smart to do. I mean, they just kept holding the orders at 38 at the end of the day, and then of course what happens now? It gaps down 10%, and it's down 11% on the day, and frankly now it looks like it's going to be a real rough time for it to get moving.
Sure. Hey, Larry, follow-up, too, as well. I just wanted to ask you a real specific question of your thinking on Apple. Now, the fact that Apple it went from 644 down to 550, your first AB pattern, you rallied up into those, actually it was the peak on the earnings, or the reopening of the stock after the first quarter earnings report. Then you came down into that 530, 528 area on Friday, bottoming beautifully at exact AB equals CD. Now the fact that we're, $25 off that low, if you had bought it, you could obviously easily place a stop at break even. You'd be real comfortable. But having seen the action just this morning in Apple now, do you have any reason to believe that this bounce in Apple is just a bounce that will give way to decline under 528, or alternatively, if this 528 low might give way for another run back to the highs? Do you have any reason to think either of those two are favored?
Well, I'm basically overall bearish. I want to see what this rally, gives us from the new moon and possibly into the full moon. But if it's really bearish, John, we're not going to get much more than a 3-day rally. I don't think we'll get back to 1335. In the S&P. If we're above that by Wednesday, the rally could go a lot higher. As far as Apple, you should look for at least a 10% move, off the bottom, and that would take you up to the, 570 level. But like you said, you should be at break-even mode now. If it gets back below, that 530 level, I wouldn't want to own it again.
Sure.
The question is how much of a rally are we going to get here? And, we're in a rally mode. There's no question about that with the Dow up 100 points. But, realize the Dow's down quite a bit from the high. So the question remains is what will happen into Wednesday. I mean, Basil talked about it. Wait, because there's no reason to buy the first day. It'll probably give you several chances to buy if it's really a good buying opportunity.
Great. Hey, Larry, thanks so much for your time. I appreciate it.
Okay, thank you, John. Always good talking to you. And we have another caller, William from Singapore. Are you there, William?
Yes, I am. Thank you for taking my call, and I'm so happy to hear you back to the TFNN.
Well, I'm not back to normal, but I'm back.
Yes, and I am actually following your specialization on Gartley and butterflies, and in particular, I was trying to follow your studies on apples and and gold, and I think Apple, you have just answered the questions posed by the gentleman earlier. I was thinking to ask you the question on gold, and it seems that the studies post that gold might have bottomed out at this point. Is that correct?
Yes, William. We went down to that 1522 level 3 times now. We did it in September, we did it in December, and now we've done it in May. The important thing, and I'm glad you brought this up because this was a section I wanted to talk about gold and silver, is that we've had a really strong increase in open interest in gold last week. We had a 10% increase in open interest, which is the first time that we've had this coming off that bottom. That means there was really strong buying coming in there. We talked about this last week on the commodity report, and not what you want to watch for is if gold, backs off a little bit over a day or two, maybe making a 61% retracement or something. That would be a good place to look at it. And then if we look at the long-term, charts that we've talked about in the newsletter over the past several weeks on the gold-silver index and the gold bug index and also the gold mining index, all of those have made major, Gartley patterns. We did make slightly lower lows, when the market, went down strongly, on that last week. But when gold held, these indices held, and they're very strong today. The XAU is up 3 points. The gold bear index is up 10 points. And so that's also telling us that we've had a major bottom, most probably in gold and silver here. But boy, if it goes below 1522, you don't want to have anything to do with it, William, believe me.
Okay, but do you think that if we just possibly bottom, are we able to take out the previous high?
Oh, sure.
I think that was something last year.
You mean at 1900? Yes, we could do that. But remember, it's taken 9 months for the market to go from 1935 per ounce down to 1522 per ounce. So that's a pretty normal correction in a bull market. And what you'll need to do in order to see gold do this, you got to have at least one really strong week where gold is up probably $100 an ounce or something like that. That would be the tip-off to me that, yes, gold's got a shot at, taking that old high out at 1,500. But until we get that, I don't think you can say that, new highs are in the cards yet. Basically, all I'd be looking for now would be a move up into the, maybe the 1,690 level when we first broke down.
Sure. And my last question would be, let's say we based on a chart, if, we can find, let's say, the chart with only one Gartley pattern versus another chart, if let's say we have 2 or 3, Gartley patterns that fall almost at the same price, are we, correct to say that the chart with 2 or 3 Gartley pattern that fall almost at the same price will most likely have a major turn?
Absolutely.
Pattern.
That's absolutely correct. The more patterns you have coming at the same time, the more probability you have is the pattern is going to be a much larger pattern. This is what we have going on in the Treasury bond market at the present time, in my opinion. And, this is, if you have multiple patterns coming at the same price, that really is important. But the other thing is important, William, is if these patterns fail, that's telling you that all the patterns are failing and you want to stand aside. You don't want to be long gold if it goes below 1522. That's going to be a very, very negative sign. You don't want to be long Apple if it goes below 520. I mean, that's $30 a share from where it is right now, and right now it looks like it's on its way higher. But when the patterns fail, you got to realize that these are probabilities, and you have usually about a 70 to 75% probability on the ABCD Gartley patterns. And the same thing with the butterflies, and your ABCD patterns are in the neighborhood of about 60%. So you do have positive probabilities, but you also must use risk control, and I know you're aware of that. So just keep that in mind, because it is very important. It's not how much you make, it's how much you have at risk. Because the markets will give you great opportunities, but you have to be there to play, and if you don't, exercise good risk control, then you're in big trouble.
Sure. Thank you very much, Mr. Pesavento, and may I wish you a very good health and, all throughout.
Thank you very much, William, and Sarah says to say hello to you.
Thank you.
Okay, my friend. Bye-bye.
Thank you.
And
Bye.
good luck on the Apple. I hope you had as much luck as you... Well, it wasn't luck. You actually did it very well.
I based on what you have taught, and I managed to get into Apples, during this rebound as well as gold. And that's why I need to really thank you, have a big thank you on your guidance.
It's much better to be lucky than smart, but I'm glad you did well.
Yeah, thank you. Thank you.
Thanks for calling in.
Thank you.
Folks, we've got another 12 minutes to go in the show, and I wanted to spend a little bit, talking about the TPT because, we're in this. We're underwater about 40 cents, 38 cents from where we are now. But this has, we're going to put the weekly chart into the Tiger TV, and you'll go back through to 2009, and you'll see that there's a 90-week cycle that has been very prominent, and we're right over that 90-week cycle right now. And this is one of the reasons why we're entering while we're in the trade. And so this is everything that you asked for in pattern recognition and cycles and probabilities and ratios. Everything is here. Whether it works or not, we don't know. The safe bet is if you, if we go below 135 in the bonds. I know that doesn't seem possible, but we've been to 135 in the bonds 3 times over the past 7 months, and we're at 140, 147.28, the 148 level right now. So that's a long way away. But if we start seeing volatility increase in Treasury bonds to the downside, then that will give us a really big piece of information that yes, we are correct, and we want to get aggressive on this, and we'll start adding to the trade if we have profits in it. We never add to a trade that has a loser, but we want to add to profits if we get into it, and that's what the strategy is going to be for this. This is a trade of the year. I think it's the trade of the decade. History will find out whether we're right or not, no, this is it. We're in, and this is what we've been waiting for. So we'll see what happened, and we'll wait and let to see what the market will finally give us. The other thing that I wanted to mention about the bond market is the fact that people say have asked me well, not asked me, but they've told me, say, you're fighting the Federal Reserve, that the Federal Reserve can do anything that they want. But folks, the Federal Reserve can be wrong. And, if they are wrong, this is going to accentuate what's going to happen with these, and then we'll know more about that as if this in fact the case. We have a very large debt problem in Europe. That's where Europe is, all the problem that they're having is because of debt. We're doing the same thing here, but people are not recognizing it because they view us as a flight to quality. And if you take a look at one of the first charts that I put into Tiger TV today, is our federal debt has been exponential in the last 4 years, and it has gone from some ridiculous amount to even sublimely ridiculous. Okay, we've got to take a little break here. When we come back, we want to talk a little bit about the currencies. 877-927-6648.
At At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted that was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back. Ending up the show, I want to remind you that on Wednesday, during the show, we're going to have Arch Crawford on, and Arch is going to talk to us about the similarities that we have cyclical related to the astrology like we had during 1987. He'll also talk about the long-term 18-year solar eclipse cycle that we've talked about today. And believe me, there's no one that knows this stuff any better than my friend Arch, because he's certainly right on top of this. Now, I'd like to talk about one more trade that you might want to take a look at. I know there's ETFs for this, but if you take a look at the dollar versus the yen into Tiger TV, we've had a tremendous amount of support come in here at the 61% retracement at 79.16. It's still very close to that level. You don't have to risk more than about 40 or 50 pips from this level. And, we've been very bullish on this for a long time. When we got up to that 84 level, it had been, an exponential move, and we were waiting for the first retracements. And, we've had several of them, and now we are at a 61% retracement of the whole move. Now, history says that if you take these 61% retracements, that the probability of winning is much greater than losing, and you don't have to risk very much at this point. So buying here in this area of around 79.15 to 79.20, risking about 50 points, your profit objective would be well over 200 or 300 points from this level. So that gives you a risk-reward level of better than 4 or 5 to 1 and a probability of better than 7 out of 10. You're not going to get those odds anyplace else, that's for sure. Oh, one other thing I wanted to mention, historical. I don't know if you folks follow horse racing or not, but the fellow who owns he's a part owner and the trainer for the horse. That is when I'll Have Another. He's had his chance to win the Triple Crown. They bought the horse for $35,000 down in Florida. Doug, the trainer and part owner, he owns 25% of the horse, used to buy coins from one of the coin dealers that I worked at when I hedged for them when I was at Drexel in Beverly Hills. And I remember the young man. He was just a teenager at that time, and he had an interest in coins, and he also was a groom down in Hollywood Park. And now he's made it to the big time. He's worth several. Well, the horse has got to be worth $30 or $40 million now. And if it wins a Triple Crown, it'll be worth $200 million. So he's a nice guy. He's just never changed. And so everybody pray for that horse to win the Preakness on June the 9th, because if he does, the Belmont, because that would really be a feather in his cap. I watched the race on Saturday, and believe me, that horse really has a chance to win, because he came from behind and he was running like the wind and had a lot more running room to go, and so we'll see what happens. But the better bet is, of course, the Japanese yen. That bet I like better than buying, betting on a horse that's going to be 2 to 1. So that's just old history stuff from the old days. The key to watch here is what we have coming into the 3-day rally. We've just completed a big AB equals CD in the E-mini S&P up at this 1310 level. We did it in 1 day, so that means that the market is still pretty strong. And my assumption, and believe me, this is my assumption, is that we're probably going to get a little choppiness here between Monday, Tuesday, Wednesday. If we go straight up into Wednesday, it might be a short covering rally, and this we'll have to wait and see. But believe me, if we go below the lows that we made last week on that on the 18th, which was equivalent to the new moon, if we break that new moon cycle low that quickly, we've set up a scenario that is extremely bearish. So below 1288 in the S&P, you want to be very, very careful with any of your IRA money or any of this other stuff. The world markets are pointing down. The Bradley market is pointing down. The Facebook IPO was a total flop. All these things are similar things that have happened in the past, so keep in mind you don't want to repeat your same mistakes. So that's all I can say. Everybody have a wonderful day, and may God bless.